Booyah! Welcome back to the channel. We're here, ready to break down the stock market, and trust me, it's wilder than a bull on roller skates. We're diving deep into the origins of this financial frenzy. Now, where did this whole stock market thing even come from? Picture this, a smoky tavern in the 1600s, not exactly the New York Stock Exchange, right? It was a place where ideas and investments brewed over tankards of ale. Back then, folks invested in expeditions to the New World. Din chin thing, spices, silks, all that good stuff. These were the commodities that drove the early market, the lifeblood of global trade. But those voyages were riskier than my grandma trying to short sell Tesla. Imagine putting your money into a ship that might never return. One shipwreck and your investment went belly up faster than you could say, buy, buy, buy. It was a high stakes game with fortunes made and lost on the high seas. So how did they do it? They'd gather in coffee houses, these early trading floors, and haggle over shares of companies like the Dutch East India Company. These places were buzzing with energy and ambition. It was the Wild West of finance, but hey, every revolution starts somewhere. These coffee houses were the birthplace of modern trading, chaotic yet revolutionary. These early investors were pioneers, taking huge gambles for a chance at big rewards. They were the original risk takers, the ones who laid the groundwork for today's markets. Sound familiar? It's the same game today, just with fancier suits and algorithms that'd make your head spin. The essence of trading remains unchanged, only the tools have evolved. Now, let's fast forward to the good old US of A. We're talking 1792, and a bunch of fellas under a buttonwood tree decided to formalize this whole trading thing. That's right, the mighty New York Stock Exchange started under a tree. Talk about humble beginnings. They called themselves the Buttonwood Agreement. Not exactly catchy, but hey, they weren't marketing geniuses. This agreement marked the birth of Wall Street as we know it, the financial heart of the world. And boy, does it have some stories to tell. These early traders were dealing with everything from government bonds to shares in canal companies. Canals, people. It wasn't always Tesla and Apple, you know, but the point is they were laying the groundwork for a system that would change the world. Now, hold on to your hats, because the next century was a wild ride. The Industrial Revolution was in full swing, and companies were popping up faster than dandelions in spring. Railroads, steel, oil, you name it, Wall Street was trading it. But remember those risks we talked about? Well, they didn't disappear. Panics, crashes, and scandals rocked the market like a hurricane. It was a constant battle between the bulls, those optimistic investors betting on growth, and the bears, the grumpy Gusses predicting doom and gloom. And let's not forget the legendary figures who emerged from this financial jungle: J.P. Morgan, Cornelius Vanderbilt, Jay Gould. These guys were the rock stars of their time, for better or for worse. They built empires, crushed competitors, and left their mark on Wall Street forever. The Roaring '20s, jazz music, flapper dresses, and a stock market on fire. Everyone wanted a piece of the action, from shoe shiners to socialites. Margin buying was all the rage, basically borrowing money to buy more stocks. What could go wrong, right? Well, in 1929, the music stopped. You know, the stock market crashed, and it crashed hard. Black Thursday, Black Monday, Black Tuesday, they called it black for a reason. Millions lost their savings, businesses crumbled, and the Great Depression set in. It was a stark reminder that what goes up must come down. The Roaring '20s, with all its exuberance and excess, taught us a valuable lesson about the dangers of speculation and the importance of sound investing. Section 5. From the ashes regulation and the rise of the SEC, after the devastation of the crash, the government stepped in to clean up the mess. They created the Securities and Exchange Commission, or SEC, in 1934. Think of it as the sheriff of Wall Street, keeping things honest and preventing another meltdown. The SEC brought in regulations, transparency, and accountability. Companies had to disclose their financials. Insider trading became a big no-no, and investors finally had some protection from shady dealings. It wasn't perfect, but it was a step in the right direction. The stock market was forever changed. It was no longer the Wild West of finance. It was becoming a more mature, regulated market, one that played a crucial role in the growth of the American economy. Section 6, Tech Titans and the dot-com bubble. Fast forward to the 1990s, and the internet was the new kid on the block. Everyone was going online, from grandmas emailing cat pictures to teenagers building websites in their basements. The dot-com boom was in full swing, and Wall Street was once again swept up in the frenzy. Companies with .com in their names were like gold dust, even if they had no profits, no revenue, and sometimes no real business plan. It was the Wild West all over again, just with more Silicon Valley and fewer cowboy hats. But just like the Roaring '20s, the party couldn't last forever. The dot-com bubble burst in the early 2000s, wiping out billions of dollars in market value. It was a painful reminder that even in the age of the internet, the basic rules of investing still apply. Section 7, the stock market today. A global casino? So here we are today in a world of high-frequency trading, cryptocurrencies, and meme stocks. The landscape of investing has transformed dramatically, with technology playing a pivotal role in how trades are executed and how information is disseminated. The stock market has come a long way from those smoky taverns and buttonwood trees. What started as a simple exchange of goods and shares has evolved into a complex digital ecosystem. It's a global behemoth operating 24/7, connecting investors from all corners of the world. No matter where you are, you can participate in this vast network of financial activity. But some things never change. The core principles of trading and investing remain the same, driven by human emotions and market psychology. The stock market is still driven by fear and greed, by the eternal dance between bulls and bears. These emotions can lead to market volatility and unpredictable swings. It's still a place where fortunes can be made and lost overnight, where risk and reward go hand in hand. The potential for high returns comes with the possibility of significant losses. So, is the stock market just a giant casino? The comparison is often made, but the reality is more nuanced. Well, that depends on how you play the game. Strategic planning and informed decision-making can set you apart from those who gamble recklessly. If you're treating it like a slot machine, throwing money at the latest hot stock, then yeah, you're probably going to get burned. Short-term speculation often leads to disappointment. But if you're investing for the long haul, doing your research and understanding the risks, then the stock market can be a powerful engine for wealth creation. Patience and diligence can yield substantial rewards over time. Section 8, your money, your future, why the market matters. Now, you might be thinking, Jim, this is all very exciting, but why should I care? Well, here's the thing. The stock market isn't just some abstract concept. It's your retirement savings, your kid's college fund, your chance to achieve financial freedom. When you invest in the stock market, you're investing in the future. You're buying a piece of companies that are innovating, creating jobs, and driving the global economy forward. And over the long term, the stock market has consistently trended upwards, despite all the crashes and corrections along the way. So whether you're a seasoned investor or just starting, remember this: the stock market is a powerful tool. It can be intimidating, it can be confusing, but it can also be incredibly rewarding. Just remember to do your homework, invest for the long term, and never, ever invest more than you can afford to lose. Section 9. So you want to be a trader? Just kidding, sort of. Look, I'm not saying you need to become a day trader glued to your screen 24/7, screaming buy, buy, buy at the top of your lungs. That's my job, and trust me, it's more stressful than it looks. The constant ups and downs, the market volatility, it can be a real roller coaster, but I am saying that understanding the stock market is crucial in today's world. It's not just for the Wall Street elite, it's for everyone. Whether you're saving for retirement, buying a house, or planning for your kids' education, or just trying to make your money work harder, the stock market can be a powerful tool. The stock market can play a role in your financial journey. So do your research, read up on trends, talk to a financial advisor, and don't be afraid to ask questions. And remember, the only bad investment is the one you don't understand. Knowledge is your best asset. And hey, if you ever need some stock tips, you know where to find me. Just kidding, sort of. Remember, knowledge is power. And in the world of finance, that's more valuable than all the gold on Wall Street. Stay informed, stay invested, and always remember, booyah!